Yo, what's going on, guys? Welcome back to another video on my YouTube channel. Today I'm going to be going over the trade that I took yesterday. I'm going to be teaching you guys how I personally trade the PM session, what you guys have to look for, and potential setups that you guys could take. Okay, so let's get straight into it. Okay, so the areas that you want to look for are 12. Write this shit down right now. You want to look out for 12 to 1:30 p.m. and you're going to mark out the high and the low of that area. It's called your New York lunch low and your New York lunch high. Those are going to be your areas of liquidity, your buy side and your sell side. Then you're going to mark out 2 to 3. Why 2 to 3? Because that is the time that the PM silver bullet starts. So you want to look for maybe a rate of either liquidity, break a structure, fair value gap, and target the opposite, sell side liquidity or buy side liquidity. Okay, so let's get straight into it. Okay, so in yesterday's trading session from 2 to 1:30, we had this high right here, which was our buy side liquidity, and this low right here, which was our sell side liquidity. At 2, once the PM silver bullet starts, price came down, rated this liquidity, it swept liquidity. And what else did I notice? That we were wicking into this 1 minute breaker block, or on the 5 minute too, it's a little bit clear. Lower low, break market structure, and you see it got respected a couple times right here, right? So this is, a pretty significant area that I want to look for. So I noticed that this sell side liquidity got swept. So now I was looking for a breaker structure so I can enter a long position. Price comes down a little bit more, and then boom, here we get our breaker structure right here, and also it leaves behind a fair value gap. So this is our ICT silver bullet setup. Okay, let's give a little recap of everything that has already been stated so far. So from 2 to 1:30 p.m. we have our areas of buy side and sell side liquidity marked out already. At 2 p.m. price comes down to sweep this sell side liquidity, and also wicking into this breaker block right here. So we have really good indication that we could see higher. We have a breaker structure that left behind a fair value gap, so we want to see a retracement to this fair value gap to fill us to enter a long position. Okay, now let's watch it right out. Price comes down, fills us in, stop below these lows. I was personally targeting these relative equal highs. I got filled right here, somewhere here. So I was targeting a 3 to 5 risk to reward ratio. Price comes down, sweeps these relative equal highs, but you could have took a partial here, another partial here, and then your final take profit being this New York high. And this was a great setup. It was very little drawdown ever, and it finally it even goes even higher than that. So we got a crazy good fill down here. It went all the way to about 26 handles, so that is insane. Obviously we took our partial here. We were satisfied with 7 handles, 3 to 5 restore reward ratio. That is more than enough than what I'm looking for. You never want to get too greedy. You definitely could have took partials, but that's just not my strategy.